Too many people. Great, amazing. All right, guys. So I think we're gonna start. If some more other people are coming, this is recorded anyway, so other people will be able to benefit from what the info that Steven's gonna be giving us. I'm gonna take this opportunity to just let everyone know that this is gonna be part of an. If I can ask everyone, maybe except the people that are going to be talking for now. So Stephen, everyone else, please turn your mics off because you just do some interference. So if you have, just turn it off. There's a little, the little icon is down the bottom on the left. So we're going to be starting a little initiative called Business Gladiators. And we will be providing such a talks that hopefully is going to be adding value to all our members and beyond. And today we're gonna kickstart this with Stephen, which is an old school accountant. He's been working in the city for 18 years, and he set up his own practice recently, and he's joined us in Leighton. So today he's gonna be giving us quite a lot of information he's had to collect and work with his own clients. And then hopefully he's gonna explain quite a bit today. Please, if you have any question, if you could write them in the chat so that Stephen can go through everything he has to say without having to be maybe disturbed and breaking the flow, because maybe a lot of information will be responded during his talk. And then I can have a read through, and then at the end we can he's going to do a Q&A. I think his talk is going to be maybe lasting 20-30 minutes. So if we look at maybe going until 11, that should be giving plenty of time for everyone to ask questions if you have anything unresponded. And obviously we'll have we'll share Stephen's details, so that if you have any question, I think he's more than happy to help you on an individual basis. All right, cool. So yeah, welcome to everyone. Please switch your mics off for now. And then Stephen, I'll give it away to you.
Hi, morning everybody. I know a couple of people on here already on a professional and on a personal level, but just myself. My name's Stephen Kelly. I'm a qualified tax accountant. I've been working in tax for an accountant for about 18 years, and specifically tax and small businesses and everything surrounding individuals and people for the vast majority of that. I used to work for large firms in central London, and I set up a business about 4 years ago now, specialising on smaller businesses, smaller companies, particularly those in the creative sectors. But I can advise on all areas of accountancy and tax and everything that surrounds that. Now, what's happening has happened recently, of course, that we all know is this word's been banded around, but there's no other word of saying it, is absolutely unprecedented. I've never experienced anything like this in the past, where there has been the crash and huge seismic events like 9/11. There's been a bit of a stagger, a bit of a drop down, but pretty much returned to normal within a couple of weeks, if not a couple of months after that event. Now, this is different. We don't know what we're up against. We've never experienced any lockdown, anything like this of the sort. And this is why this government support that not everybody's going to get, they have to kind of draw the line somewhere. Whether you think that's fairly or unfair is a slightly different question. This has never been done before in any capacity. So that's why it's complicated, and perhaps not everybody feels they're getting the help that they deserve. I'm going to go through each sector, depending on your type of business, self-employed and limited companies, and what's available. If you fall outside of this criteria, there is action being taken by lobbyists to try and get everyone included. But until we know that, and we can only really, my advice would be, we are where we are, and anything that is given beyond what's available at the moment is only going to come your way as a bit of a bonus, for want of a better way of putting it. So what I'm going to do, you've probably seen the agenda, but I'm going to go through the main sectors that are going to cover. I expect everybody who works at Mainyard Studios, you're either going to be self-employed in your own right, or as in a sole trader doing a small set of accounts, so not a limited company, and also basically a limited company, a director of a limited company, either where you are the sole director and the sole shareholder, so just yourself running that business. So in your view, you would be self-employed, but you're not. You're a director of a limited company. And then, of course, that director of limited companies also go from people who may have staff, may have premises, may have a lot more going on, stock and so on and so forth, not just your sole trader limited company. So perhaps the best way to start, would be is what's available for self-employed. Now, most people have probably read everything that's going around, but to try and dissect this, if you were self-employed after you started your self-employed business after the 5th of April 2019, there is no support available for you at all at the moment from the government, other than universal credit, which I'll come on to in the next section. So if you started as a sole trader after 5th of April 2019, unfortunately, there's nothing available for you. If you were a sole trader prior to the 5th of April 19, then you can claim this 80% grant from HMRC, and that's going to be based on the average of your profits for the preceding 3 years. So 18-19, 17-18, and 16-17. And if the average of those 3 years is less than £50,000, you'll get 80% of that amount, subject to this £2.5 cap. Now, if your average is above £50,000, then again, as brutal as it sounds, you'll get nothing. If you started self-employment in that interim period, they'll pro rata and they'll average it out for you. Okay. So the other complicated would be people who may think they can qualify who won't. And I'm not trying to be negative with all this. I'm just trying to say it as it is. We're with the people who may have started self-employment prior to 2019, but also had another job. Now, this is where I think it is a bit too harsh, because many people who are setting up their own businesses do like to, or have to be in a situation where they'll have a main job and also work self-employed on the start while they build up their business. Now, if in that situation, if in those preceding years, so the 3 years in question we're talking about, if your self-employment income was less than 50% of your total taxable income, and this is taxable profits, by the way. So if your taxable profits are less than 50% of your total income, that year will not count. So basically, you have to be pretty much a bona fide self-employed person, giving most of your income, more than 50% of your income, from self-employment prior to 2019 to qualify. Now, how it's going to work at the moment is, if you do fall in that category, of course, you should have already done all your tax returns for all of those years. If you haven't done your 18-19 tax return yet, you've got until the 22nd of April to get it done. And then HMRC will count it within this averaging period. If you haven't done your tax return yet before that period, you need to get going pretty sharpish to get it submitted. Otherwise, it will be disregarded. Now, what's going to happen at some point before June, HMRC are going to contact self-employed individuals to basically invite them to apply for the grant. So they're going to say, we think you qualify. They need to go onto HMRC's website through your government gateway, if you have one, and then claim the repayment that way. Then it will be issued to you. A bit of a word of warning is that at this point in time, there are scammers. Okay? Now, they don't care about the global situation at the moment. If you get a text or an email claiming to be HMRC, ignore it, because it will not be from HMRC. It's the usual scam that these people try to do all the time. They're only going to be looking for the more vulnerable people to do this at this point in time. So what I would say is HMRC, we think they're going to write to everybody, or send some message through your government gateway. That's how they will contact you. So if you do get any message, any spam, if you're not sure if it's from HMRC, don't click on the link and send it to your accountant, or just send a screenshot of it and they will confirm saying, no, don't do anything. And this isn't a new activity by scammers. They tend to do it all the time. For example, right at this time of year, they often use the situation of you're going to be due a refund. Please click on this link. It'll be the same as that. So just a bit of a word of warning, okay? Because for desperate times, scammers, that's what they try to do. Now, if you do fall outside of one of these categories, at the moment, our understanding is that you're only going to be available for the Business Interruption Loan Scheme, which has had its problems, but we're going to come on to that a little bit further down the agenda once I've covered the area for limited companies. Now, I appreciate I'm going quite quick here, but hopefully I've maybe just confirmed what everybody already knows, and I can take specific Q&As on this at the end. Now, the next kind of area of people that we need to be looking at are the, one second. Right, universal credit. Now, the reason I'm putting this in now is that this is what's really going to be available for self-employed people who, not as well as can maybe claim the £2,500. Oh, sorry, there's one other thing to add on this self-employed, and I'll let forward a little bit. You can claim this and still trade. Okay, you can still be generating profits, you can still be self-employed. It doesn't matter how much or how little your business has been disrupted by the coronavirus. You can still claim the 80% up to the £2,500. So it's not subject to you not being able to work, not to be confused with the furlough side of things. Sorry, I should have mentioned that. The other opportunity that might be available for self-employed people is universal credit. Now, universal credit is effectively a benefit. It was a much maligned system when it was brought in by HMRC. Now, as accountants, we don't tend to really get involved in that sort of benefit structure because it can depend on your personal circumstances. It can depend on children, marriages, support, other social issues. But generally speaking, if you have savings, irrespective of what you do, if you have savings of more than £16,000, you are expected to rely on that money. So you cannot claim universal credit. If circumstances you have less than £16,000 in savings, then you may be able to make a claim. This may allow you to get help with your rent, help with your under basically housing allowance. When we're talking rent here, we're talking residential rent. Okay. Also other help for free school meals, effectively what we used to be job seekers allowance. It's all kind of wrapped around in this universal credit. So my general advice would be, if you've got savings of less than £16,000, and this wouldn't personal savings of more than £16,000, you might as well make a claim. All they're going to do is say no. But that's up to you. And generally, beyond that, there's not a real great deal I can say about universal credit other than they are getting absolutely bombarded. I think they had something like a record 3.5 million claims last week, unsurprisingly. So the turnaround times aren't great, but they're not that bad. I'm understanding you may get funds in about 2 weeks. Best thing to do, apply using the Government Gateway's website to claim universal credit. You have to do it as a joint claim. So you also have to do it if you live with anybody, a spouse, then you make a joint claim for the two individuals, so they can take into account not just your savings, but the person you live with. We're not talking about housemates here. We're talking about people living in a relationship with. I think somebody's because everyone mute their microphones. I think there's some. I've got 2 kids as well, but I think I can hear 2 little kids running around in the background somewhere. Thanks. Okay, so that's all there really is to say about universal credit. I can send you links for how to apply to it if need be. So now I'm going to talk about the next category, which I think, again, will probably apply to a lot of people within the Mainyard Studios communities. If you have your own limited company. Now, it's worth drawing the line here, like I did at the start, between self-employed and a director of a limited company. If you are a director of a limited company and operating your entire business through a limited company, you are not self-employed. You are the director and shareholder of a limited company who employs you. Okay, there's a distinct difference in that. Okay, so you may view yourself as self-employed. Now, it's not the best news. You've probably all figured out that already, that so if you're a director of a limited company, the amount of support that is available to you is very little. Basically, you can furlough yourself as the company director employee, which I'll explain in a minute. And that is really all, the 80% of those salary costs is all really people from directors of limited companies are going to be able to claim. Because what is the common structure is that you pay yourself a minimum salary for tax and national insurance purposes around about between £700 and £800. This may sound familiar. And take the rest of your income out of your company by dividend. Now, the reason this is different is because in tax law, dividends are not classified as income. That is as taxable income. They are as an earned income. They are treated as investment income. The distinct difference between those two, you pay a lower rate of income tax on investment income. Now, that is why some people often set up the companies that way. It is tax efficient to do so when you get to a certain level of turnover. However, when it comes to categorizing your income, your dividends from your limited company are viewed in tax law the same way as it would be a dividend from BT or Lloyd's or whoever it may be. So when you're looking at somebody's taxable income from their business for the purpose of the current schemes and the current relief, dividends are disregarded. Now that does put company directors into an unfair position, in my view, where you've got a company, say, turning over 40 grand a year, you're taking out your salary by dividend, so taking out your money out of your company, the full amount each year by salary and dividend, up to £40,000. Well, in short, you're only going to get 80% of your minimum salary, £650 odd or whatever it may be. So unfortunately, that is the long and short of it. There is no further relief at the moment. People are lobbying, businesses like Mainyard Studios, my professional associations are lobbying, the tax and accountancy bodies are lobbying, saying it's unfair. And this also extends to the people who are missing out on the self-employed one as well. How far we will get with that, I don't know. Because what they're looking, particularly for the directors of limited companies, because what they're looking at doing is basically rewriting tax law to treat dividend income as trading income. And that's just, I can't see that happening, to be perfectly honest with you. Whether they'll take an amount out and look at pro rata in tax returns, it's hard to say. But I think we have to work on the basis that limited companies are just going to have to ride this out for the time being. As soon as there's any announcement made, it is going to be very well publicised because it will be a seismic change. And I think, unfortunately, there's no great deal about it because they are looking to say that people who would be working on this basis should be looking at getting loans and other supports to help you through. Now, the kind of relief that is available for company directors is whether or not you can furlough yourself. Okay, the furloughing scheme is basically designed to, if you're a company employing anybody, to basically, it's the staff that you would have had to make redundant as a result of the coronavirus. You are basically, the government is saying, well, we will fund 80% of their salaries as long as you promise to keep them up. Effectively furloughing. That's what furloughing generally means. So basically, it's so if we put that onto a small level, onto a macro business level, what happens to company directors? Well, yeah, you are employees of your limited company, and it's highly unlikely you may have been taking a salary out more than the minimum one. And if you are, then yeah, you can claim 80% of that. If you're not, then as a director of a limited company, right, you can only furlough yourself if you are not going to be involved in any revenue making decisions. Okay. Well, revenue making activities. Now, how do you define that? Well, it's a bit of a grey line. The only thing they've specified you're allowed to do is do your company accounts, your company tax returns, and your personal tax returns. That is the only thing they've specifically defined you can do. Now, but what they haven't done, they haven't equally words. They haven't said what you can't do. So they haven't said, oh, you can't do marketing, you can't do business development, you can't do this, you can't do that. Now, if you had a shop and had a retail business, well, you're either open or you're not open. And if you fall into that section, there's other grants and things available. So if you have a business, how do you demonstrate that you're not doing anything? Well, how it's going to work is that as an employer, you need to register your company as an employer that's going to be furloughing people, okay? And in HMRC, the fundamental principle of the current taxation is self-assessment. So you're going to have to say to the HMRC, I am going to furlough some employees. Then you furlough yourself, and then you can make a claim via the HMRC's website, so you think how it's going to work, by your pay-as-you-earn scheme to support your 80% top-up. Now, what's going to happen is that you would make your submission and they will then fund the money for the 80%. Now, they're going to backdate this to 1st of March 2020, but whether or not this scheme is going to run for 3 months. So whether or not when they do release the payments, hopefully later on in April, whether or not they're going to give you March, April and May all at the same time, I don't know. I think they probably will do, but it's hard to say. So whether or not you do or don't furlough yourself as a company director is going to have to be your decision. Okay? But bearing in mind that this is the only support you're going to be getting from HMRC at the moment. Should you all be doing it? Well, it depends on what you're doing, and whether you're actively trading or not, whether you feel the support. Good example would be someone who can't would be me. Yeah, I'm an accountant. I'm extremely busy at this point in time. Yeah, I cannot really demonstrate that I'm furloughing myself. But if I worked in a creative industry, then yeah, you might be keeping your leads going, and maybe you should look at furloughing yourself. In the event, I would say in a worst case scenario, that you furlough yourself and then HMRC then come back and revisit this further down the line and decide whether or not how they're going to quantify whether you should or shouldn't aren't working is pretty much going to be impossible. But even if they did and then they came back to you and said, no, you shouldn't have been furloughed, all they're going to do is ask for the 80% of what they've given you back. I'm only going to be talking about 1,700 quid, which is valuable now, but in the future may not be so. But the odds of HMRC doing this retrospectively are going to be slim to none. But what I would say, if you can claim and you feel that your business has been heavily restricted, I think you should look at furloughing yourself. If you have employees other than yourself or your spouses who happen to be directors, you need to tread carefully, because it's not just a case of furloughing people. You are effectively making them redundant and then furloughing them. So that is a employment contractual law issue. Now, of course, if you're a director of your own limited company, you're not going to sue yourself for wrongful dismissal in the event that things don't pick up and you have to make redundancies. So if you do have employees, you need to be looking at their employment contracts, because some contracts may have had furloughs written into them, some may not. Again, this may or may not apply to the majority of people on here. And if you do have specific queries on whether or not you can furloughing, you need to speak to a HR professional, or maybe you're the solicitor who drafted your employment contracts. Okay, so now that I hope I've covered the areas of what you can and can't claim. Now, this is the people, so if you feel like you can't claim, or even if you can claim and you're looking for more support for your business, there's the Business Interruption Loan Scheme. Now, these are the loans that the Chancellor banded out that basically, yeah, if you apply for one, HMRC, the bank, were going to underwrite the loans, so the banks will give you one. Now, this hasn't worked in practice anywhere near like the government have said it was going to. Of course, they are rushing through a huge amount of tax legislation and laws and supports through Parliament, and there's going to be things that are going to fall by the wayside. Now, my understanding from clients is that banks are either just taking an incredibly long time to respond, if at all, or if they are, they're just saying a flat no. Now, or asking people to offer support or protection or guarantors for the loans. Now, that wasn't supposed to be part of the deal, the arrangement with the banks. Now, what the Chancellor or the government have done, last Thursday, in the coronavirus speech, he announced that he was saying it's now time for the banks to repay the faith that to repay the public who effectively bailed them out in the crash. Now, that's obviously all well and good, but we all know banks do not play. They don't do what the government says. It depends how you would look at it. The banks call the shots, essentially. Now, but what the government has said, they've revamped this business loan interruption scheme to basically make it more flexible so the banks cannot ask for security of loans less than £250,000. They've extended it further. So they've basically given the banks a bit of a three-line whip, if you will, and said you must play ball. They've also told banks to try and you must offer the business interruption loan scheme loans before their own products. So what the original scheme was, in the business interruption loan scheme was first, was that you applied for your loan, you applied for your bank or a bank for a loan. If they couldn't offer you it on their own commercial terms for security reasons, risk reasons, whatever it may be, then they should offer you the business interruption loan scheme. Now, the banks weren't really doing that. So now what they've done, the government have told banks to move these business interruption loan schemes to the front of the queue. Okay? Now, I've heard of stories of people who've basically emailed contacted the banks for even small loans and just not hearing anything and saying don't call them or whatever it may be. Now, what you basically got to do is basically try and be patient. These banks are going to be trying to give these loans through to you as quickly as they can. Now, if you've got a business of a certain size, you've probably got a business relationship manager or something like that. Hound them. Make them work for what they do. That's their job. If you don't have a business account manager, then you're going to have to just try and just keep on pressurizing the banks as much as you can for them to release the funds to them. But since this was first announced, it was revamped on Thursday last week. So we're now 6 days into that. So hopefully at some point, the back end of next week, there should be some traction on this and it should get moving. But again, what we're talking here is about the public sector and the private sector. The private sector does what it wants. The public sector are enforcing these loans. How it's going to work through, I don't know. But if the governments are underwriting these business loans, which again is unprecedented in generally in business economics, then the banks should start hopefully playing ball soon. They've had a bit of a bollocking from the government, for want of a more profound way of putting it. So hopefully businesses are going to start seeing something very soon. Now, the other thing I wanted to go through before we open it up to general Q&As, hopefully I've covered most of the areas, is a small business grant fund. Okay, now this is of particular importance to a lot of small businesses, in particular the Residency, some of the Mainyard Studios, more of the studios than the desk renters, but also all small businesses as well. In that this is the grant that's going to be made available to business rate payers to help you pay your rent. Okay. Now, I can't speak for what's happened is the government last week formally made its funds available to the local authorities to distribute this money. So the local authorities have got the cash, and the government have been very quick to say, we've given you the cash. So basically, the people who can claim things are going to stop hassling the government for it. It's now the local council. The local councils have got the money. Okay. Now, how they distribute this to individuals will depend on your borough. Now, what I do know from existing clients based in the Waltham Forest area, so Walthamstow, Leighton, and around there, is that the claim, they have contacted people, and there's a link that I think Remy shared around the Leighton group yesterday, I think it was it the day before, to basically help speed up this claim. Now, this claim, if you were eligible to it, I had a client yesterday who did the same thing, both of them made the claim, and has been promised those funds by the 19th of April. Okay? So that's not in the too foreseeable future, but it's only once the claim has been made. Okay? Now, one thing to bear in mind with these grants are there to support your business expenses. The grants, as we understand them, are going to be taxable income. Okay, so if you're entitled to your £10,000, the idea of that is basically if you only spend £8,000 of that, so you are going to be left with £2,000 worth of taxable income. Okay, it's meant to fund your ongoing expenditures more than anything else. So again, if anyone who can claim this, that £10,000 is invaluable to help meeting your business costs. So you have to contact if you're in one of the other Mainyard Studios falling outside of the borough. I think I would expect the one in Bow falls under Hackney. I would have thought you have to contact Hackney Council. The Wimbledon one, not sure what the Wimbledon local authority is, but you know what I'm saying. So this isn't coming from the government; it's coming from your local authority, and that's generally all I can really think of at this point in time. Probably, if any, we'll open it up to the floor, and I think Remy's got some questions. I think what will probably happen is that if a question applies to one of you, it's probably going to apply to half of you, and the other questions might apply to everyone else as well. So I think anything that can be asked will be relevant. And one thing to bear in mind here is that I'm here to help people. The rules, I'm a tax advisor, but I'm an independent tax advisor. Not that anyone's going to say this, but I'm not making these rules up. So if I'm saying you can't claim something, I'm not trying to be brutal. I'm just trying to explain to you where you stand, so then you can make decisions based on your finances and business from there. So I think I've rattled on for long enough now, so I'll open it up to the Q&A, if that's okay, Remy?
Yeah, sure. So I mean, I written there's a few questions on that the guys have put in the group, and I'm gonna go around in order and just literally just ask for your name and see if the response you put been responded, and if you can just unmute your mic and just tell us if it has or not. There's a couple of points I just want to quickly start because they haven't come up. I have them. And then another point I'd like to make. Through the community, I've had a lot of people contacting me and asking me quite a lot of questions about how they're going to be doing to pay for their staff and etc. I just want to point out, and I completely understand that every single person, businesses is different from one another. But the luck that some people have, through Mainyard Studios and the way we run our business is that, I mean, this was never planned, but the fact is that all our offices are broken down into spaces, and that you should be getting this £10,000 grant. For me, this is unbelievable. This is crazy. This is such an amazing thing that the government has done. And unfortunately, it doesn't apply to all our desk members. This is why we reduced the membership to next to zero, because they will have no help. A lot of people are concerned. I mean, like, I'm the same as everyone else. I'm paying myself a minimum wages, so I'm not going to be getting much. However, I think that, the reality of this is that if you are renting a studios, in average, and again, everyone's situation is different, but in our spaces, the average studio is about £750. You're going to be getting £10,000, and if you do get it, and some people already got that money, even if it was to last for 6 months, there's plenty of money left to pay some other expenses, and not everyone is in that case. There's many people in other co-working space where the business has not been done the same way. They do rent an office, they're not going to get it. So I'm just trying to respond to some people that have been asking over and over and over. This is amazing, and a lot of people are not in that situation. This has been put up to pay rents, but there's going to be so much money left over for the people that are with us, and this is up to you how you're going to be using this. There's furlough, so hopefully your employees, your team members have been, you reduce that cost. So what other cost is left after that? It's for you to think. But I think this is really good, and I want everyone to keep positive. A lot of people has asked, what's going after the 11th of March? Yes, the government has had to put some rules in place to stop frauds happening. Arnold is working really, really hard with all our council rate people and trying to lobby as well the councils to make sure that, in some of our space where the rating came after, it was out of our own hand, and no one was expecting that they would be giving this. So there was no pressure on their side, and there was no pressure on our side. Now the pressure is there, and then we're making sure we're working really hard to make sure that everyone is getting grants. Some of our other space, they already got those grants. So there's a lot of positive coming from this. Now, what I wanted to ask you, Steven, is that how does that work for people? I have multiple companies, and I'm paying myself the minimum wages in I'm just on 2 payroll really, but those 2 payrolls bring me to about £25,000 a year. So can I furlough myself in those 2 companies or not? I've heard different rules, but really it doesn't really make sense.
Well, yeah, I think technically you can, because basically, again, this comes down to this contractual law sort of issue more than anything else, and what duties you are doing. So technically, if you are not doing remunerating work in inverted commas for both those companies, my understanding is that you can furlough yourself from both. If you ran 2 companies, you could furlough yourself from one and not the other, depending on what you was doing in both of those companies. But technically, no, I see no reason from what I've seen why you can't furlough yourself from more than one. For usually, yeah. So because if you do have more than one limited company paying yourself a salary, you've been doing that previously for commercial reasons and for sort of tax planning reasons, and you're allowed to tax plan. And that's perfectly within the remits of the tax law. So no, I think you can if you have more than one. Would be my understanding. Again, depending on this debatable, what remunerating activity are you actually doing?
I think this is going to apply to a few of our residents. I know some of them are running multiple companies. Okay, let's go to those questions. So instead of just re-asking them, because some of them were asked quite early in the chat, if you could just tell us if it's been responded, so I can move on to the other one. So Sam Gardon, you've asked 2 questions. Could you just maybe quickly tell us if they've been responded? Otherwise, if you can re-ask what has not been. Sam, are you still here?
Hi there. Yeah.
Hi.
Yeah. No. The second one about the business interruption loan, I think, was answered very well. I just wanted to re-ask the first question, which is, does applying for a universal credit as a sole trader now affect in any way or preclude me from potentially getting the 80% grant compared to my earnings in the future? Is there any information?
No, definitely not. What they've done with the self-employed interruption scheme, they've been pretty sort of brutal with how they've cut it off. And from that, there's going to be winners and losers. I can't think of a better way of phrasing it. But essentially, no, any claim to university, anything you're earning now or anything you've earned from April 2019, be that self-employment income, universal credit, whatever it may be, has no bearing whatsoever on this 80% for the previous 3 years. So with that, there's going to be people who could effectively still be working now, or had in those years earned, say, £49,000 on average, and now earning 100 grand. They'll still get the support. Whereas, unfortunately, if you flip it on the other head, you could be the other way around. You could be earning 60, and then 30 in 20, and you'll get nothing. So, but in terms of that, so what they've done, there's a hard line cutoff at April 19. So anything from then onwards, universal credit, whatever it may be, is completely disregarded. So no, I would just go ahead and make that claim. Now, the universal credit claim, even if you are still self-employed, you can still make a claim, but it is based on income. So my advice would be it won't affect the £2,500, the 80%, whichever way you want to put it. But it could be, if you are working and self-employed and still earning money now, then that could affect the amount of universal credit you could get in the current year. But there's certainly no disadvantage of doing so within the back year's claim.
Okay, great. Thank you very much, Stephen. That's really useful.
No problem at all.
Neil, you had a question about your wife that does those dolls. I don't know if this has been responded, but
Yeah.
I know. Yeah.
I think so. So it's just, obviously, as self-employed, it's really black or white whether your income is there or not. I'm just wondering whether there's any sort of burden of proof to say, yes, my business has been impacted by COVID-19, or whether it's strictly just a grant that people get regardless of circumstance.
Sure. So are we talking about the £2.5 grand here, or are we talking about the furloughing your wife who may be on your payroll? What? Sorry.
No, so she's self-employed individually.
Oh, sorry. Yes. Okay. Fine. Yeah. So basically, no, you are, the UK operates independent taxation. Basically, the income of your spouse, or your spouse, is completely independent. The only things it becomes joint for is things like universal credit and child support, because basically they are benefits, not income. So your wife's self-employed income and her claim will be completely independent of your own situation. So she may or may not be able to claim the 80% depending on her individual circumstances. Again, sorry, go on.
Yeah, so I was going to say, so for her business, if it's been sort of partially affected by COVID-19 but not wiped out, is she still eligible for the grant? You don't have to demonstrate that you're unable to work or anything like that.
Right. This is the only slight potential grey area. Now, I think everyone's going to be okay, because you basically have to be still trading. Again, I hate any inverted commas thing, but I can't think of a better way of putting it. There's whether you're still trading or not. Now, if you are still registered with HMRC as self-employed, so you've done your 18-19 tax return, you're going to do your 19-20 tax return, even though you can be self-employed looking to earn money and not be earning money. So you can be actively self-employed and earning lots of money. You can be actively self-employed trying to earn money, or trying not. Now, how are you going to demonstrate that? Well, it's quite impossible to demonstrate that. But the only reason how your wife may have slipped up, for want of a better way of putting it, would be if she told HMRC she'd stopped self-employment. So on her 18-19 tax return, she said, I stopped self-employment. On the 19-20 tax return, which we can now file, if she'd put on, I've stopped self-employment, then, well, she stopped self-employment. She's no longer trading. But if you don't do that, you effectively are still trading. Now, the advice that I'm giving clients is that if you think you are going to be eligible for the claim, that I've been advising them, would be to get your 19-20 tax return done as soon as possible, because that will demonstrate that you are still self-employed.
Right.
Now, that's the advice that's not HMRC. The government haven't said they will hold back claims if you don't do that, but it's only going to strengthen your situation if you filed your tax return. for 1920, because it's going to say, well, look, I was still self-employed in that year. Now, in that year, of course, there could be no profit. Well, that's fine, but you're still trading, if that makes sense. So my advice would be to get that 1920 tax return done as soon as possible, because if there are going to be, this is brand new, if there are going to be any reasons to hold anything up, that might be the sort of questions HMRC might ask. Oh, can you send your 1920 tax return in? Yeah, but they haven't done that because they don't want to be given inundated with returns that aren't really relevant, albeit it's done online. But my advice is to get it done. It's only going to strengthen any claim that you may not be able to have and demonstrate that you're still self-employed.
Yeah, and to confirm, Stephen, from what I understood is that as opposite to the people on PAYE, people on self-employed can claim and still work as well.
Yeah, absolutely. Yeah, absolutely. And that's why the scheme itself has become, obviously, it's people who are going to benefit are going to be like, this is great. People who aren't going to benefit saying it's too harsh. But yeah, you can still be self-employed. As long as you meet that averaging profits and you are self-employed prior to April 19, you will get the money, you will get the grant, irrespective of what you're currently earning or not, as the case may be. And that is completely 100% how it's going to work.
Okay, Shiraz, did your question got responded?
Yeah, thank you, Stephen. I think it was completely answered, to be honest. So you can move on.
Okay, Mauro, you had one. I mean, you had a couple that I responded to, but there was one I think that was really relevant to your tax. As that one, how it was the £700 a month. Has this one been responded? Mauro, yeah. Okay, I'm not sure if he's here. Johnny, you had a couple as well. Are yours being responded?
I just don't know that much about the universal credit side of things. My wife is in the unfortunate situation where she became self-employed this year. Yeah. So she's kind of, we're seeing how it goes with her, but really her only recourse seems to be universal credit, which would be a joint claim. And I had a flick through the form and was like, I don't really know. So one question was, does this affect any kind of credit rating in the future? We're kind of on the borderline of like, it might be some extra cash, which is always useful. And we're definitely not rolling in it, but we could survive without it as well. So it's kind of a coin flip for us.
Yeah. Okay. Well, yeah. Well, the universal credit, it's a benefit. So it has no bearing whatsoever on any form of credit rating whatsoever. So if you can feel you can claim, you should claim. It might only be £100, £200, but you might as well claim it. This is why you've paid taxes and paid everything else in the past, to rely on these help when you get them. So yeah, unfortunately, this is where the flip side of what the previous thing was just to me about. You can still be self-employed, but equally you can get money, or you can be recently self-employed and not get anything. So no, universal credit is your only option, and that would be what you should go down. It has no bearing effect on credit ratings whatsoever. Very, very briefly on that, without going too much on topic, there's of course the contacting your banks for getting help with your mortgages. There's like a 3-month deferral mortgage break that's been offering by the banks. Now, what I don't know this question. So another question, but not the answer, is that will that affect any future borrowings on your mortgage? Will it affect your availability to pay, even if you're with the same bank? So let's say if you're going to remortgage later on this year, should you be taking out a mortgage payment holiday when you had to remortgage later this year? That is a question that is more for a mortgage broker than not. I would expect that it would be extremely unethical for the banks to do that, but banks, as we know, aren't always ethical. For want of a better way of putting it. Again, I keep using that same phrase, but yes. So really, if your payment, it's like, and again, but what with credit rated, again, it's the same with if you're asking to defer loans or credit card payments or anything like that. These should be payment holidays within the frames of your credit agreements. So it shouldn't affect your credit rating because you're not defaulting on anything. If you was to default on something, then that's a no-no, where that would have a detrimental effect on your credit rating. Whereas if you're going to your lenders and saying, I can't pay this, they're going to be like, okay, we'll give you a holiday. So I don't think that'll have any bearing on your overall credit rating. But I know that's going slightly off topic there. But before you go and defer your mortgage in particular, I would speak to your mortgage broker to find out where do I stand. Because if you're due to remortgage in a couple of months' time, what should you really be doing? But anyway, so I didn't mean to go slightly off topic there, but just to reassure you that any claim for universal credit will not affect your credit rating in terms of sort of general finances.
Great. I had one small follow-up, which is, we have a mortgage. Is that a factor in kind of making a claim? But I suppose what you've already answered this with, you might as well find out by actually filling in the form. So.
Yeah, absolutely. Yeah, absolutely. Yeah. And in terms of your general, whether or not you want to defer if you could pay your mortgage and whether or not you want to defer it for these 3 months just to help out, whatever it may be, that's a personal financial decision that you need to make. But no, whether or not you do or don't get any deferment on loans or mortgages or anything like that will not affect the universal credit as I understand it. That is basically just linked. If you've got savings of more than £16,000, you cannot claim it. If you fall somewhere in between, then you should be below that. Then you should be able to claim it.
Great, thank you.
Okay, there's a few more questions that came out, and I think some of them are pretty good. BB is asking if we can claim 80% salary support for staff without furlough. I mean, my guess there's going to be no. It needs to be via PAYE. And then the other one is, can you use the £10,000 grant? This will be for the business rate relief that they would get towards salaries as well. My guess is that, I mean, this was put to pay rent, but it's a grant. So in the end of the day, you use it as you need, right?
Correct. Yeah. Correct on both counts. On the first one, basically this 80% is only really for to cover employees you would have had to make redundant. So basically, think of it, it applies to small business, but think of it on a larger business scale. If you've got 100 employees, your turnover has just dropped. You've got to keep 50 on to keep your business going, but the other 50 are, I wouldn't say surplus, but you'd have to make them redundant. Well, in order to retain those employees to hopefully kickstart the economy when we're through all this, then the government paid 80% of the furloughed employees. But it's effectively furloughing is a contractual arrangement with your employees. Okay, baby, all right. And the other question was, sorry, it's slipped my mind. Sorry, what was the second question?
It was how to use that. If you could use the £10,000 to pay salaries.
Yeah. It's a grant. It can pay salaries. It can pay rent. It can pay your ongoing business costs. It's going to come in. It's going to come in as basically a lump sum, and that's going to be effectively deemed part of your taxable turnover. So if you spend, say, £5,000 of the £10,000 on your rent and the other £5,000 on staff, then you're okay. Then obviously there's no tax to pay because the income has been leveled up with the expense. Whereas if you pay your rent and then £4,000 worth of salaries, then you're left with £1,000, which is yours, for want of a way of putting it. Of course, that would be subject to income tax and national insurance or corporation tax if you're a business. But basically, it should help meet your expenditure, whatever that may be. Yeah, it's a grant. It's not ring fenced just for rent.
Yeah. So following kind of on those grants. I mean, someone asked when do the clawbacks with grant tend to happen? I mean, my view on this is that there should not be a clawback if you're using the grant the way it should. I know that in some of other space that one of my partners got, some people have left before even getting the grant, and he's been trying to tell them, I understand every business is suffering, but stay. You're gonna get a grant. Now, if those persons are leaving and getting the grant, I think this is probably when clawback would happen. And in terms of 80% follow and everything, what's your view on this, Stephen?
Well, again, it's a grant. So basically, it's meant to be, the grant is to do with it's related to your business rates. Okay, that's why the local authorities are paying it and not the government. So if you leave the premises, you are no longer a ratepayer. So you're no longer entitled to, well, what the cutoff's going to be, I don't know. But yeah, if you're no longer a ratepayer, then the grant is for rateable people with rateable properties. So again, yeah, if you're no longer a rateable property, then you can't claim it. What's to stop people claiming it and then getting it and then the next day leaving? Well, I think then there could be potential some sort of clawback, because there is an element of fraud in that to a certain extent. And as well as the moral and ethical issues around why you're doing it, this is a help that businesses are getting for businesses to help kickstart the economy, to help you survive. If you was to run up your business and take the £10,000 and spend it, then, well, yeah, there's the moral question surrounding that. But equally, the government might turn back and say, hang on a second, you are no longer a rateable property, and they'll know, and then they might claw it back. That's what I would think. I don't know that for fact, but I doubt it if they're just going to give it to everybody, because otherwise there could be everybody who's got rateable properties now could be thinking, you know what, right, I'm just going to, for the next 3 months, not bother. So I think that could be an element of clawback then. The self-employed isn't a grant. That's coming from HMRC. That's based on your taxable income, and that will not be clawed back, irrespective of what you do or don't earn. The rates is a different thing because it's effectively connected to your business council tax. So it's tax, but it's a different tax. It's an indirect tax.
There is another couple of questions. So Bibi is asked, where do we apply for the 80% support from? I guess her staff is on PAYE. So my understanding is that, number one, you need to pay them as normal, but try to put furlough on your payslip so that the government is aware of it. And the portal will be opening, I think, end of this month. I think this is right. You can tell us about that. And Dave has also asked this question you and me were talking about before, if a company director can apply for universal credit.
Okay, well, the easy one, the company director could apply for universal credit. You're technically still employed. Whether or not you may or may not get it is debatable, because if you're still employed, whether or not you can claim universal credit could be down to other factors, such as the amount of children you have, income support, housing allowance, things like that. Again, I wish I had a more conclusive answer on that, but that's more of the inner workings of the universal credit. Now, in terms of the jumping around here, so in terms of the other question, sorry, Remy, it slipped my mind very briefly. What was the first question?
Now, the other one was when does the
Okay. How it's going to work, right? It is linked to your pay-as-you-earn scheme. So what happens is that every time you or your accountant does your payroll, an electronic submission is made to HMRC of that amount, so you get paid in that amount. Now, it's understood that it's going to be based on the February payroll. Now, if you're a company director, you probably pay yourself £719 a month every month. It makes no difference. Now, what's going to happen at some point this month, they're going to open up a specific portal on HMRC's government website where you go in, you then say, I am an employer who's going to furlough my employees. Can I have some money? What's a better way of putting it? And then you would then go in that and they will refund that to the business in order to meet the 80% costs. Now, on the payslip itself, it probably is a good idea to basically say the amount of furlough, amount of not the government support you're getting. Now, if you're furloughing an employee, again, it's a contractual issue. You can, if you want, you can pay 100% of that person's salary if you want to. The support you're getting from the government is going to be the 80%. So what you might want to do on the payslip, let's say someone earns £1,000 a month, you might want to put 800 quid furlough, 200 quid regular salary. But you are this is where it gets a little bit into contractual law. I don't think you have a contractual obligation to pay 100% of the salary. You may or may not. And again, it comes down to the fact that Some staff, you might really want to retain them and pay them 100%, might not. But again, we're getting into a whole HR business myriad of situations there. But yeah, essentially, I would say show the 80% of the salary furlough on the payslip as a separate entry. Bear in mind, again, it is going to be taxable income on the individual. So you put it through your payroll as normal tax, national insurance. It's effectively salary for the employee. You as the employer are getting that 80% support into your business bank account to cover those costs, including the employer's national insurance, which is, of course, that's the cost of your employment as well. And so go live later this month, make the claim, and then I would expect, depending on how quickly everyone reacts, I would maybe expect the funding maybe a week or so after you've made the claim, because of course all these businesses are going to have, they've already had the hit of pay in the March one, which they'll get backdated support for, but the April is going to be another round of salary costs. So I think the government will be looking to do this before the end of April, but again, I can't promise anything.
I had a question with regard to universal credit. I mean, I've never claimed anything in the UK, so I don't know what it is exactly, but is this the one that's linked to the £16,000 saving, which for quite a few directors would be like, you're not going to get it. You know, you probably have a house. Some of us has a house, £16,000. Most of us will have this probably on the saving.
Okay, well, it's a good point actually to raise that, right? Yeah, right. Now, if you've got £16,000 of personal savings, so in a savings account, then you cannot have universal credit. Now, then, if you're a sole trader with a business account, yeah, that effectively with more than 16 grand of savings in, that is your savings. You're a sole trader. Okay. Now, if you're a company director who could be eligible for universal credit, any funds held within that company belong to the company. They don't belong to the director. So you could effectively have 50 grand in a company's savings bank account, which will not be part of your universal credit claim, because it only becomes your money once you take it out of the company by way of dividend or salary. So yeah, so it depends on your circumstances, but no, assets such as owning your own property, or even owning investment properties and so on and so forth, I don't think that'll restrict your claim to universal credit, other than the fact, of course, you might be getting rental income from an investment property. But in terms of savings and mortgages, no, I think it is just a straightforward, have you got more than £16,000 in a bank account, yes or no? So if you're just over that at the moment, I know it's not a time to be frivolous and spend it, and I'm certainly not saying play the system, but if you've got £16,500 in a bank account, it'd be maybe advisable to spend 500 quid of it on something that you need. It's one way of looking at it. But again, I'm not saying play the system, but that just makes sense. Okay.
Get a computer.
Exactly. Yeah.
Last question from Matt. I don't think he's going to have a really good news on that one, but he's asking if there is any government relief for LLP businesses where all the partners are paid on a monthly dividend.
No. Right. Unfortunately, right. It depends on the structure of the LLP, right? As a partner in an LLP, yeah. Getting to quite technical level stuff here, but basically, you can be a partner of an LLP, which is effectively self-employment. Okay, so then you could be basically you take out some people take money out of an LLP. It's treated as trading income because it's effectively a partnership, and therefore you could be entitled to the self-employment rates. So the self-employment relief scheme and 80% of the previous 3 years previous to COVID-19. Now, if you're an LLP with a corporate structure right within that, taking your money out of that income, that LLP as dividend income, depending on the structure, then again, no, dividends are classified as investment income, and they do not qualify for any form of help or relief. So it depends on the structure of the LLP, which may have been set up for commercial reasons, tax reasons, whatever it may be. But at the end of the day, it's what's basically going to go on your tax return. As in, is it income from a partnership, self-employment, or a dividend from an LLP? So it depends and speak to your accountant or the LLP or whoever it is the LLP. They'll be able to advise you a little bit more on the structure of that to see what category you'll fall under, or to if you're struggling to get an answer from them, look at your personal tax return. If you're showing it's partnership income, then you're self-employed. If you're showing it's dividend income, then it's dividends.
Yeah,
and you can't get anything. Okay?
Yeah, thanks. Cheers. Cheers, Remy.
No problem.
Wow, so that's been pretty amazing. There's been so much really good information. Clearly, Stephen knows his stuff. I think we're going to have to go now because it's 10 past 11. So thank you very much for joining in. Thank you so much, Stephen, for all this great information. I'll put the information in. We have a recording in case you guys want to go back through it, and we'll put it online for the people that couldn't join in. We'll be doing some more of those, that on talks that can add value to every one of you while we're all on, kind of staying home and trying to stay positive. So thanks everyone for joining in, and stay safe, stay strong, stay positive, and see you guys later.
Okay, take care, guys.
Thanks, Stephen.
Thank you.
Thank you, everybody.
Thank you.